Hey, happy Friday, everyone. It's August 2nd. Prices of BTC currently at 10,525, and looks like prices are moving really nicely. All right, so let's dig into it and see what we see. Okay, so on the 4 hour chart, we see that we did create a nice bottom here yesterday, right? And we kept on moving, right? This was right around, wait a second. I think this is where we were basically yesterday. Okay, we broke out of here, right, which was this white dash trend line, and we kept on moving. Now, my suspicion with this move was really regarding the volume. Okay, and this is where things get really interesting. All right, typically, we've said over and over again that in this area, okay, as prices went down, kind of like this, right, in this regular flat correction, we saw the same similarity in volume as well, right? It was kind of like this. Okay, volume kept going down, contracting. All right, now typically what should be happening is volume should be expanding starting this area right here. Okay, now I haven't quite seen that just yet. What I've been looking at is I laid a moving average, which is the 7 MA on the volume. And if you look at it on the daily, right, here's something that I don't quite like, okay? When we lay down the moving average on the daily, you can see it's dismal volume compared to all the volume back here, okay? Even all this volume that's been coming up. And this is something that concerns me. And this is why I'm not saying that this move isn't real. I'm saying that it might help if we start breaking some critical levels. Okay, so especially in the 4 hour, one positive thing that's happened, and I'll tell you that, is the 50 EMA and the 200 EMA prices crossed above, which is a really positive sign. All right, so let me hide these tools right here. Okay, so the 50 and the 200 EMA prices crossed above. And now if we start looking at the pivots right here, okay, this is another positive sign. All right, so price has crossed the 4 hour pivot, which it hasn't done successfully since we broke under the pivots from back here in 13th July, right? So almost good 20 days or so. Okay, so now that price is actually sort of accelerating on up, one thing that you can do potentially is you can either wait for a pullback, okay, on this price, or you can, I guess, buy in now. I personally think that buying in now is a little bit risky because we're almost so close to the resistance levels on higher time frames. Like, let me turn this on right here. Here's a daily chart, right? And this is where things concern me a little bit, okay? Especially in the daily chart, when I start looking at the volume, I was a bit concerned because you could see that this is the 7 moving average laid on top of the volume, right? Over here, this run up right here in April, right? Once we started breaking out of the 7-day moving average on the volume like this with these big spikes, that's when we started seeing our big run up. We haven't quite seen that yet. Who knows? It could happen, right? For sure. But then we started really seeing that volume accelerate on up. And this is where, even if you caught the meat of this move right here from here, you'd be just fine, okay? So for the most part, I would say that, you could wait for a volume spike that would be very convincing. You could also, let me turn off this volume right here. You could also wait. Let me turn on the 30 EMA, the 50, not the 50, the 21 EMA, and the 50 moving average right here. Okay, here's something also interesting. Okay, so remember that the 21 and 30 EMA had historically been support all the way up. We've actually now broken above that. Now the 50 resistance, a 50 moving average is now posing as resistance, or was right here, and right here. It's now again meeting price at about 10,550. Okay, now you could wait above that as well, or you could just wait above both of them, which is the 50 MA as well as the pivot right here. That would put you about 10,850 or so. So another $300 climb. Okay, so if you can wait another $300, that might be a safer spot if the daily actually closes above it. All right, if that's possible. Even over here, you know, one thing, I mean, we caught this bottom right here about 9,100. We went all the way to the pivot and got rejected by the pivot itself, right? So that same pivot, I mean, it's right around the same marker essentially, about 10,700 to 10,800. So that's one thing that I'm concerned about, is there's actually a lot of resistance in this area, and I don't know if we can get through it just yet. But we'll have to see, right, exactly how we react to this level. And that's why, you know, if you want to be truly patient and you don't want to, you know, buy the top essentially, or buy resistance right around here, you may want to wait above this level, especially on a confirmed daily close. Okay, and a daily close like this is, you know, not really the best sign, because this is more of like a, I don't know, maybe like a, it's not really a doji, but just the fact that it has a high wick at the top of this trend like this doesn't make me feel comfortable buying here, right, on this daily. So if you have sort of like a candle like this basically looks like a Morobozu, which are big, you know, heavy bodied candles, no wick to either side. If you have something like that closing above this, I'd feel very confident. Okay, even if you have something like this closing above the pivot, but you haven't quite had that, and you have the 50 moving average right here. Okay, I've actually told my community that I'm still shorting. I mean, listen, you know, I would personally, if I have to set a higher stop now, I'm probably gonna have to hedge it with a long. Okay, because I don't want to be too much in the red on my short, especially with the funding. That typically happens because, you know, shorting on an uptrend like this is really painful due to the fact that, you know, I mean, one, your short is basically underwater. I'm averaging around 10,300 for my short right now, so it's definitely getting a little heavy. But the thing is, I cannot, you know, let go at this particular point, because I still have this particular resistance to wait forward to. So the point is that you need to understand what levels you are looking at when you're either shorting or longing, okay? And how much pain tolerance do you have when you are looking for positions like this, right? What is the point that you're willing to throw in the towel, or how much leverage do you want to use, you know, based on your account balance or available balance that you have? You know, what is your risk tolerance in terms of each trade? Are you risking too much capital in one trade? So these are all things that you need to iron out before you hop in. I think there's different calculators that are available. I think this one right here, blockchainwhispers.com. I like the fact that there's, you know, the Bitcoin longs versus shorts that are stated right here. If we refresh this page, you could see that the longs are really stacked on BitMEX for Bitcoin as well as Bitfinex. And so this is why I'm still sort of a little bit more confident that I'm on the other side of the trade, where, you know, there's more pain to be, I guess, had by the longs than the shorts right now, because the shorts are not over leveraged right now. The longs are. Okay, so there'd be more pain for the longs to be able to be felt if price does collapse. And typically the market, you know, makes a fool out of those who are, you know, just aggressively longing or shorting one way with the trend. And, you know, that's why I personally think that the longs might be feeling the pain soon. But again, hey, I could be wrong. Prices could just keep on moving up, but that's okay. Listen, I'll probably get in, you know, somewhere around 10,800 or so if I see a nice daily close. Like I've stated over and over again, you know, some of my game plans are really just watching for volume increase and seeing the critical levels, like the daily pivot broken, you know, climbing above the 50 moving average, maybe even flipping these 21 and 30 EMAs to the bullish side. You could see that this was a bullish cross right here because the 21 is above the 30, and you can see over here right now the 31 or the 30 is above the 21. So not the best sign right now because they've all flipped bearish, right? And another thing that I noticed here on the 4 hour especially is if I turn off this 50, I'm going to turn on the 50 EMA and the 200 EMA, okay? I'm going to make this into a line chart, right? So I looked back and I thought, okay, when is the last time we've had sort of a bearish cross on the 50 and 200 EMA moving averages, right? Because we had one right here on July 19th. Well, if you go back all the way, we actually have not had either of the 50 or the 200 EMA cross bearishly on this entire run up. You can see right here, okay? So from February 18th, once we had the cross, right, first, prices bounced off nicely. And then over here, okay, first of all, they bull cross, prices bounced off nicely, and then they kept bouncing off the 200 moving average, and then they kept on moving up, right? On this entire run up, you could see the gold, which is a 50 EMA, is above the 200 EMA right there. This entire run up for the last 5-6 months, we have not had a bearish cross. Okay, so this bearish cross right here is not really the best sign. I'm not saying that it can't flip back again, but to successfully do so and actually hold, that might be another signal that you may want to look out for, right? If you truly want to be safe. Or like I said, you could just wait simply above that daily pivot that I showed you, okay? Here's another thing that I noticed on the 4 hour chart, okay? So on this chart right here, here's something like this, okay? This is, let me see right there, from here to here, kind of like that, okay? That is right here, okay? That's this right here, okay? Hidden bearish divergence, all right? Lower high on the price, okay? And indicator is making a higher high. You can see right there, lower high on the price, indicator is making a higher high. See, just like that. So this, I would say that, at some point price is going to pull back a little bit. And here's the thing, folks, you will always have an opportunity to buy back a retrace, okay? Now, I'll tell you one mistake that I made, okay? I should have held my spot buy right here because I actually bought this exactly, okay? So in this region right here, I bought this perfectly because I was looking at this trend line right here, okay? From this white dash trend line, from this touch to this touch, this touch, this touch right here. And then once, it was resistance, it flipped into perfect support, right? So if you are someone who trades diagonals, this is, perfect flip of resistance turned into support and then bouncing off up and away, right? So this is a perfect trade for me. But the reason I let go is because I was seeing some bearish divergence. I forget exactly where it was or what time frame, but I was definitely seeing it. And I escaped with like, I don't know, maybe a 0.25% gain, right? And for the most part, I don't really concern myself with really chasing this market. I'll just, wait it out. I'll buy the next, level of resistance that breaks, or I'll wait for a pullback on the prices and I'll buy the next support, right? Next support on the pullback of the prices is probably anywhere between, I want to say 10,100 to 10,200. Let me see if I can map that out. Okay, so here it is. I'm going to turn off these moving averages right there. All right, so this was previously resistance, right? Resistance, 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 resistance. Now we're going to wait for it to flip support. Okay, so at some point, I'm expecting prices to kind of come back around like this. Okay, and if this does flip as support, okay, then it should take off like this. So you can buy the support on the pullback when we do have one. And more than likely, I mean, almost always it does happen. Well, not almost always, but again, more often than not. Okay, it does happen like this, where prices will come back around to confirm this area as resistance turn support, and then you can buy the support instead of chasing it $500 higher. All right. So, but here's the interesting thing. Okay, say prices go up like this, and then they come back around, and they go like this, and they go like that, and boom, they crack it. Okay, then this is the risk that you have to take. Okay, if you're going to buy the resistance, try to flip it as support, that's honestly a risk that you have to take. You may have to set your stop just under here, this previous area, maybe even a little bit deeper, maybe like 10,000, 10,020 or something, right? So you don't get wicked. These are the risks that you have to take in a market. Every single trade, every single market will always have inherent risk. Okay, the problem is that people think that they're supposed to get guarantees in every trade, and unfortunately, folks, it's just not going to happen. Okay, what you need to understand also is that how much are you willing to risk on each trade, whether it's shorting or longing or spot buying, altcoins, whatever you trade. Okay, you have to figure out how much is your account size, right? So I pulled up this little notepad right here. Okay, so the way I break it down is, let's just say use a, I don't know, $100,000. Okay, let's use $100,000. All right, 100K is the start. Okay, total capital in crypto. Okay, here's how I like to break down my long-term and medium-term stack. Okay, so I like to put in between 50% of that in long/medium term. Okay, and then the other 50 I put in short term. 50K in short term. Okay, this means anything that I'm trading with on say BitMEX or Deribit or spot buying or altcoins or whatever. Okay, this is all encompassed in this, right? So this is 50%. That's 50%. This does not get touched on a month-to-month basis. This is mostly long-term. Okay, from a few months to a year or two. Okay, this is day trading / swing trading. All right, so 50%. Okay, so in this 50%, I try to allocate maybe 10%, anywhere between 5 and 10%. So 5K to 10K for derivatives like options or perpetuals such as long/shorts with leverage. Okay, so now I have basically 40K, let's just say, or 40%. So this is 10%, we'll say 40% remaining. This is all separate. Okay, 40% in day trading. All right, so in this, okay, you have to figure out on each trade, you do not want to risk more than 2 to 4% of your capital. And again, guys, I'm just giving you a general system of how I play my accounts with different stats, right? This is over the years, and this is how I've collected data on how I trade. Okay, I would say probably safer for you would be safe for you would be 1% on each trade. Okay, so that would mean that of this 40K, you should not be risking more than $400 on one trade. Got it? If you want, again, you can go heavier, right? So you can do, again, this is all your choice. You can do 10%, which again wouldn't be smart, but that would be $4,000 of the 40K, right? But still, even then, that's better, right? Because I often see people going all in. And I know, listen, I get it, okay? 100K is a lot, I guess you could say, easier to break down in large numbers to trade with, but it doesn't matter the dollar amount, okay? You're forgetting that you're not here to trade dollars, all right? Think of it as percentages of your account, and think of it as the value of the technicals, okay? It doesn't matter if you're paying, $9,100 for Bitcoin or 10,500. What are the technicals behind it? Okay, so if you're buying at 10,500 right now, when say price flipped back over here, say this was really 10,500 in this area, right? This is a good area in terms of technicals to buy into. Okay, but if you're buying up here, 10,500 is meaningless, right? So you see what I'm saying? It's pointless to buy up here because what are you buying for? What's the reasoning behind it? Are you just buying because it's just you seem to think that it's going to keep on going up? It doesn't matter. Your best case scenario is that you may want to wait above at least this pivot right here. Okay, this area right here. Then you at least have a confirmed break that, okay, we're going to keep on heading up. Okay, so that's at least your best case scenario, right? Especially on a daily time frame. But if you're buying where I stated earlier, right here, you're basically buying for no reason. Okay, you're buying because you think that the prices are going to keep on going up, or you don't want to miss out on this big run up that you've had, and you feel like you're paying higher and higher prices, right? Don't worry about this. Again, like I said, trade the technicals, trade percentages of your account, and you will be almost always more successful. Okay, don't look at the dollar figures at all, whether it's trading or whether it's even in your own account. All right, try to trade the percentages. Okay, so this is really a good formula for you to keep in mind how you want to divide up your portfolio. This is again not investment advice. This is how I break down portfolio, and I've explained this to my community many a times. All right, that you need to figure out how you want to divide up your portfolio. If you don't have enough money or you just want to trade, that's fine. Okay, but try not to make these mistakes right here, where you put in 100% on every single trade, right? Because you'll get burned. Because remember, rule number 1 is preserve your capital. Rule number 2 is grow your capital. Okay, so if we even, here's something interesting, right? Forex compounding calculator. I want to show you guys something interesting. Okay, I want to say, let's just say you don't have a lot of money in crypto, right? Say you start off with $1,000. Okay, and we'll ignore this percentage per month. Let's just say you take one trade every week. All right, so there's 52 weeks in a year. All right, so 52 weeks in a year. Okay, so we'll do that. All right, so in 1 year, if you're only going for 1% on each trade every single week, right, this is what you can make. Okay, here's your ending balance. All right, you can make 60% on your $1,000 beginning portfolio. Okay, say you go for 5%, and say you're aiming for, I don't know, maybe 2 trades a week. Okay, and you're only going for 5% on each trade. Matter of fact, let's just go for 3%. Okay, and you're aiming for 2 trades every week, right? So that's 100 trades in a year, starting off with $1,000, right? With 3% on every trade. Okay, here's where that would get you. You'd be at $20,000. Okay, close to $20,000. So the point of this lesson is that, first of all, you don't need to aim for the bottoms right here. All right, you just need to catch some of the meat of the move, and you need to go for small percentages, and consistent, trades where you only trade a couple times, where you don't get burnt out, where you don't get too greedy, okay? Because that's where you make a lot of mistakes. So the lesson that you need to take away from this video is that don't worry about the prices, the numbers, the dollar values, whether it's on your account or whether it's in the chart. Look at the technicals, all right? And if the technicals are good, take the trade. And there's also a chance you could be very wrong, right? You could be wrong, but what is the risk on the trade? If you are thinking that, okay, let's look at it this way, right? If I want to take a long trade, right? So say prices come back into this area. Okay, so I buy in, 10,150. My stop is somewhere around here, okay? So about, let's just say, I don't know, 10,000 or so, or 10,010, right? And I'm aiming for a target, okay? If prices bounce in that red box right there, I'm aiming for a target of about 11,000 or something. Okay, that's a risk to reward ratio of 6.42. So you're risking about 2% when prices come back into this area, okay? And you're hoping to catch this bounce on the way up. Now, if you're wrong, all right, you're wrong for about 1.4 or 1.5%, okay? If you're right, you can gain about 9 or 10%, maybe even more if you just hang on to the trade. Because if this is truly a nice, resistance turned into support, you keep on going. Who knows? This could be, all the way over here, like 12,000 or something, something ridiculous, right? So that could be very possible. Okay, so the point is that you need to keep in mind that each and every trade does carry some risk with it, but how much risk are you willing to put onto the trade based on your technicals is all up to you. And especially it works, based on the fact that you are buying based on the technicals. If you're buying here, okay, say you're buying right now, all right? Let's do the same formula, the long position. Say you're buying right now, okay? And your stop will probably be down here. Why? Because if prices do dump, they're more than likely going to come all the way back into this support box, right? If you get wicked, then you're even more screwed, okay? So your stop won't work properly, right? Because your stop will probably have to be much deeper. So it's about a 5% stop. And then you're hoping to get a target from here to the next resistance level, probably which is about 10,800 or so, right? Let's just say 10,850, right? So you're aiming for a 2.8% gain for a risk of about 4.5%. Your risk to reward ratio is 0.62. So you're risking more than you're trying to gain in this trade. So you see why trading the technicals is much wiser, because not only does that improve your risk to reward ratio, it reduces your overall risk on your capital, right? So this is why working with understanding how to compound your trades properly, going for small percentages on each trades, also understanding how to break down your capital like this, and then putting that together with proper technicals, not focusing on the dollar value and only the value of the technicals, will ultimately lead you to become a successful trader, lead you to become someone who has a better strike rate, better win rate, okay? But trading, just because you're, chasing prices, because you think prices are just going to keep on going higher, that you're not going to get an opportunity at 10,500, and prices are just going to keep on going like this. Guys, if you've seen anything in this market over and over, you know that it's run by professionals, it's run by bots and algorithms, right? They will more than likely obey either fractals or Elliott wave counts or Fibonacci retracements, and all those are something that you can read and understand. So if this is the top right here, a 618 retrace will be somewhere around 9,700. If we head up towards that 10,850 resistance from this bottom to this top, then your 50 fib retrace becomes about 10,000 or so right there, which is perfect, right? Because you bounce off this area right here, this consolidation period. So again, if you just wait patiently, you will get the right trade at the right time, okay? All right. Let's see. Let me see how the weekly looks. I think the weekly is looking decent now. I mean, we did have a nice move up over the past 48 hours or so. This is a really, really nice weekly candle so far. Again, this one opened right here around, let's see, open at 10,600. Okay, so if we can close this candle right here, which is in the next about 48 hours, well, actually, I think it's like 54 or 56 hours or so. If we can close this weekly candle all the way up into about 10,600 or 10,700, that's a very big bullish engulfing, right? And then again, you won't miss out because then you'll have this kind of weekly and then potentially this kind of weekly coming up, because a bullish engulfing more than likely will charge back up prices even higher. So even if you miss on the price action the next 2.5 days, okay, and this is really supposed to be a bullish engulfing, you can ride the next wave up into the prices, okay? So the point is that, being patient in this market and waiting for the technicals to play out, whatever time frame that you want to trade, whether it's the 4-hour that I showed you earlier, which is this right here, or the daily close, which is above, 10,800, or if you just want to wait for the weekly close, hopefully above, 10,600 or so, or 10,650, right, in the next 2.5 days, all of which, you can get some good signals, right? So buying right now, in my opinion, okay, isn't really the wisest decision, because for the most part, you're so close to getting a nice confirmed, maybe full-bodied weekly bullish engulfing candle in the next 2.5 days, which would then give you an idea that, okay, maybe prices are trending higher, and then you can buy back in. More than likely, it's probably going to be a wick of a retrace in the following week. Maybe, I don't know, something like this candle right here has a small wick coming into it and then bouncing off, or you can even buy on the closing of the weekly. It's really your call, right? And then you can ride up the following couple of weeks, right? So missing this run up from, say, this low that we had about 9,100, this much, that's 10% or 15%, okay? But if you say catch the next move from this high to this high right here, which is 11,600 resistance, you still gain about 8% on your portfolio. Or if you go even higher, you just made 13,900, which is a previous high. That's about a 30% move, especially if you just wait on the confirmation of this close right here. Okay, so I've laid out a few different scenarios for you to understand. In my community, people still know I'm short. Again, I have a proper risk management plan. You need to ask yourself if you do, and go back and read this information if you don't understand exactly how we came up with this strategy, this way to employ a better tactical strategy for yourself, your trading environment, your trading strategies, right? All right, folks, I think that wraps it up. I just wanted to sort of reiterate on some of these things because I know people are sort of freaking out. They missed the $9,100 bottom. But for all you know, folks, markets change, dynamically really fast, okay? I mean, this run off from 1, 2, 3, 4 days, right? It was marked by just consistent selling for 1, 2, 3, 4, 5, 6, 7, 8 days of selling, right? So don't think that the sellers have just randomly left the market. Wait for the critical levels of resistance to hit, say especially on, like I said, the 10,800 marker, especially where these two candles close and these two wicks hit, okay? This is probably going to be an important marker, especially on the daily, okay? So it's going to be an area that you want to keep in mind, okay? 10,800. And watch the reaction of price action right there. If you close under that, and you see a follow-up bearish candle, then you know that this run is over, and then we're going to keep on going down, okay? The fact that we haven't had confirmation yet should tell you like this, okay? I'm going to mark it up like this, right? So about 10,800 probably. This probably differs on different exchanges. And over here on BitMEX, it's about 10,778. But if we hit this level, kind of like this, right? And you come back around and you don't stand on that support that I mentioned, 10,100, then more than likely we're going to go back down, probably to about $9,500, $9,600. And then if that breaks, then we go for sure back towards 9,100. And if we go to 9,100 a third time, I mean, more than likely this is going to break. I'm not saying I'm being, adamantly bearish. I'm saying that it's important to keep the scenario in mind, okay? Because we haven't had confirmed breaks, especially on the daily. All right. All right, folks. I hope that helps. Come join Cryptosomniac. Over here, if you go to the products page, cryptosomniac.com, products page right there, you can learn all about the technicals that we spoke about, some risk management plans and strategies here in the technical analysis course, or you could buy Advantage right here for $97 a month, which in my opinion we more than make up, especially if you read our gains reviews, people making all kinds of gains, whether you're shorting or longing the market, whether you're in swing trades or day trades or intra-hourly trades. You can see people are making some good decisions based on our analysis. All right. So read these at your own accord and come join Cryptosomniac. All right. Cheers.